Traders, we are in the final episode and we're going to be talking about just our own experience. We got a lot of experience, Josh and I, since really like 2016 is when I started. Like we say, experience is the best teacher. So we can teach you guys what we've seen and hope that you don't make the same mistakes, or hope that you additionally will do some of the things that are working out well for us. And then we're going to discuss shorting penny stocks as well over at Trade the Pool. But it's been a journey, guys. I mean, when you think you've seen it all, then something else just comes flying by. But I mean, for the most part, Josh, I think we've seen everything. There's a lot that goes on, and then the GME, we went through that. You go through these insane squeezes that it's like the probability so low, but then it happens.
Yeah. Yep. No, I'd say I think we'll still see it here and there. I know it seems like there's been something recently where I cannot believe I've never seen there. Something where you just haven't seen something before. It happens here and there, but not nearly as much because as longer you do it, the more you get to your point of I've never seen this before, slowly but surely goes away to it happens, but not nearly as much. I mean, even like recently I was watching, I think it was the NFL, but something happened wow, I think it was actually in the NFL when I was pulled up the Eagles game. Eagles were playing it was a few weeks ago, I talked to this on my live stream. The Eagles, I put on a game out of nowhere. You get home, just put a game on. The Eagles were last seconds, Eagles versus the Rams game-winning field goal. The Eagles block it, take it back to the house for a touchdown, and that's how the game ends. The very next game that they go to is the Buccaneers versus the Jets. The Jets block the Bucs field goal kick and take it back to the house. I'm like, I have never seen back-to-back plays in the NFL with two different games. So you get my point. Will it happen? Yeah, but how often? Not too often. Like HKD is one of the last ones I remember in 2022 where it went bananas from 10-15 all the way up to 2,500, and of course ends up really funny how it ends up at 2,500 on the dot and fails and comes back. But yeah, it doesn't happen often. Every few years, we may find something out of the ordinary that doesn't happen that's different. But for the most part, that's why we've, essentially what we said over and over and over is rinse and repeat the same thing day in, day out. And that's what you want to do in the stock market. You don't want to have something that happens randomly every single day. Like you said, random results or random trading equals random results. And we don't want that. We want to see the same setup every day. And if I saw the same setup, like let's just say we've talked about this in the last lesson, go pull up my trend line cracks and I go through those slides. If I saw that same setup and it was happening every single day, you know how easy this would be, right? This would be so easy, but it's not that. And so we have to wait, have the patience and the discipline for those setups to come to us every single day. If they form, if they may not, then we don't take those trades.
Yeah, I mean, that's really, truly looking into that crystal ball, having those A-plus setups we've talked about, and then really just pulling the trigger when you see them, but never being so over-convicted, because like that HKD up to 2,500, I want to share some personal stories as well from over the years in hopes that you guys don't make the mistakes as well, but one trade can change the whole career, and that's what I see is a lot of traders' problems. You can be a great trader, but then you allow that one HKD, the one GME, the one whatever ticker, that's just going to squeeze indefinitely. Like QMMM was the recent one that just went in the T12, and you lose all your progress. The capital preservation is the most important thing ever. So never get over convicted. We see that. Like even with the sloppy seconds I'll take, Josh, I usually preface in the room by saying, I have an edge here, positive expected value. I will take this setup on sloppy seconds approach nearing the highs, but it's not a guarantee. I just want to make sure I'm always prefacing that, because I know with groupthink, especially in a lot of these rooms, traders are not trading their trading plan. They're trading somebody else's. And so you got to formulate your own plan, even if you're in a room, and really put on that risk on each and every trade. So small caps is interesting, right? A lot of traders think it's like the feast or famine, and I hear that a lot, where it's like every trade is going straight up or straight down, and it doesn't have to be that way. But your judgment in these trades needs to be that of it's either right or right out. Never overstay your welcome, because a lot of these squeezes that we see, they happen on the low float names. We've gone over this criteria in previous episodes. Like you got to know the criteria. If it's a tiny float, maybe that should be an avoid for you, like only trading tickers that are maybe 10, 15, 20 million plus, so you don't step in front of something that could squeeze indefinitely. But never overstaying your welcome. You're right or right out. It's okay to be wrong. It's not okay to stay wrong on anything, on any ticker.
Yep. Like we've talked about for sure. I know in this whole entire series was talking about having the risk management, having a stop loss. You got to stick to that within every trade. If you do that, you'll have some more longevity in this. And that's the thing. Don't overstay your welcome, because you're going to be wrong. There are going to be some setups and trades where it continues to go in your direction, whether it's a long or a short. So you can hold that, we've talked about that as well. Having some runner, keeping something, some stake in that move on the way down as it heads in your direction. But there's going to be a lot of trades where that doesn't happen. And so you can't overstay your welcome or add into a losing trade. Please understand that what we've talked about here has been very, very important from 1 now to 8. And this is just a repeater of those things things that we went over. And I can't stress that enough without having, having a stop loss. I understand entries for sure, everything, if your entries off, your trades off. So let's work on that early on. But the key other thing to worry about is going to be your stop loss. Listen, making money, as I've said so many times, down the line can be something you worry about in a factor in stock trading. It's all about the entry and all about risk management, building in the discipline and the patience, and overall, then the confidence will grow with it.
Yeah, I love that quote from Mark Douglas: "Be rigid with the rules, flexible with the profit expectations." I like always knowing where the risk is, so I know exactly I'm risking $50, $100, $200 on this trade, but the profit's going to take care of itself. I'll scale out along the way, but I'm going to let those winners work for me. So, Josh, over the years, I mean, because you've done so many one-on-ones and you've moderated chat rooms, so what have you seen is like most traders crutch in trading? If you like, give me 1, 2, or 3 things that you see, like most of these traders struggle with this, and maybe that could benefit some of the viewers.
Yeah, I think one of the first things, just going back to that, worry about your stop loss and overall having one. A lot of traders don't define one early on, so we'll start with that. Even back to the gurus we've learned from a decade ago that have been doing this, now for probably 15, 20 years, however long they've been doing it, which I remember from a lot of traders is cut your losses quickly. Now, that's a simple rule, but okay, cut your losses quickly, but how? That's all up to you in the end and how you trade, right? If you watch these, I've determined how to establish my stop loss. It all comes from my entry and then my target. I'm quick enough to understand now, yes, I need a stop loss, but I need to determine it upon where's my entry at, and then what are my targets and how am I going to base this off so I can have a 2-to-1 ratio. So please make sure you have a stop loss and you manage the risk the best as you can. Like, that needs to be the biggest thing you need to worry about, is your risk management. The second thing, in my opinion, is creating a plan. A lot of traders don't create a plan. So this is where I'm just kind of go down the line here, that all forms back to point 1. So have a stop loss. Overall, make sure you have a plan created. So if you have a plan created, that means you do have an entry area idea. You do have a stop loss area idea with a target. And I think the other thing that really hinders a lot of traders overall is the sizing. A lot of traders, they want to make money. And so that comes with sizing and the greed. So I don't want to hold and hope. We can go that hold and hope strategy. I think that kind of ties into 3 here, and also back to 2 with not having a plan. Because a lot of the time, when you have the hold and hope strategy, we know, Kevin, what? They didn't most likely have a plan to begin with. On my number 2, they didn't create the plan, or B, they're what? They're reforming the plan mid-trade. And so find a stop loss, manage your risk. Secondly, please create a plan and stick to it. And third, be careful with your sizing. It isn't all about home runs and JG Wentworth commercials and it's my money, I need it now. Start with small share size overall. See, those are the 3 biggest things overall.
I love it. That was incredible. The nail on the head. I couldn't agree more. I see that as well. No stops, no plan. So it's gambling. I mean, you're just gambling. You don't know what you're doing. Just looking for the dopamine rush. And the sizing is way off. So you don't know what hands are good hands. It's like always that poker analogy at the table, but you're literally sizing crazy. Like you get a 7-2 offsuit and you're all in on the, like, traders that just don't have the experience to know what differentiating what hand from what. Like, they don't know the book. You got to know the book.
And where's that all come from? And that really the biggest thing, like what would be the haven of that, the coaching tree, the coach that started all that would be doing all that would be what? Journal and track your trades. You've got to journal and track. If you journal and track, you're going to figure out where your stop losses should be. You're going to figure out what your plan and create that should be. And you also will figure out what your sizing should be overall as well. If you're journaling and tracking and going over and doing your homework and going over your trades each and every day and what the setups were and tracking and journaling, you're going to start to understand who you are as a trader so you can get all those 3 things down. And so do you do that coaching tree of tracking, journaling, and worry about those 3 big hindering problems for early on traders, or even traders, let's say early on, you could be 2 years in and still having those same issues. Why? Because the first 3 to 6, 7, 8 months of your journey, you didn't do any of that. You created the bad habits, and now those bad habits are stuck in place 2 years in your journey while you're sitting back going, well, why didn't this work? Why am I not getting this? Well, because you created bad habits to begin with, and you didn't create early good ones. And listen, you can still do that, but you've got to understand you're at 3, 4, 5 packs of cigarettes a day. You can get back to 1 pack or less a day, even back to no cigs, but it's just going to take time, patience and time.
Yeah. Uncommon patience, uncommon discipline. You don't have to be the smartest trader. In fact, I've seen incredibly smart people, way smarter than me, find no success at this because there's a few reasons for it, but it takes discipline. It takes uncommon patience. You got to react, not predict. And there were good examples of this today, Josh. In chat, you did that well, very well with AQMS. So Josh, he was just announcing to chat today, essentially, like, if this ticker is coming up to my level here, I'm going to take the trade. And if not, I'm not going to take it. So it's just reacting to the price action versus trying to predict where this ticker is going. If it doesn't go there, I'm not trading it. I'm just going to react to the price action. And this is where I see a lot of traders mess up too. They're taking predictive trades. I'll give an analogy too for the newer guys that may be doing this. I started out like most, and as far as longing pretty much everything, I was just A hopeless optimist in the as we are, in
Gotta wrote
trading.
about a Shakespeare book.
I know, exactly, and really just rooting for all these companies. That's how I started. I wanted all the companies to succeed. Well, I don't want to short. That's evil. Desiring for company, and then over time I gravitate towards just what works. And for me, that's reactive. Reactive on the short side. Shorting for me, it was scary at first, daunting. Now it's easier in my opinion because I can be late to the party. I went over that today. That's my reacting versus predicting. I show up late. I take the hangover the next. Longs, have your fun today. I'll come in tomorrow and short you down when there's less volume and we can just bleed out the longs. But you just got to let them come to you. I think there's a sense of anxiety amongst traders. Like, I need to have a trade. As Josh said, I need it and I need it now. Whether that's home run trading, your sizing is off, or just the fact that you want to be involved in a trade. Because we're degenerate traders. We want trades. We want to trade. And yeah, we all love to trade, right? But we've gone over in other episodes. More trading does not equal better results for your trading account. In fact, oftentimes it's going to equal worse. So that's not letting the trades come to you. That's predicting. We want to get away from that and just react to the setups. Let them come to us. Just have the ticker there. Have it up. Have your 10 stocks on your watch list and kind of map it out. Do what Josh is saying. Plan it all out. If they don't get to your level, you don't take the trade. If they do, you react based off of the price action. 100%. Trading objectively.
100%. Yeah. Hey, going back to bounce plays, like just a quick analogy or even just analogy, but what I did as a trade. When I first started, right, I think we've known this. I've said it enough. I was just a bounce trader. There'd be many days like an STI, or that's today. Of course, you want to go back to today's chart, which today is October the 14th, but you get these big runners. We talk about QMs. We can go back. We've seen multi-step staircasing type runners that are just go, go, go. My point is there'll be a play up and I'm looking for a bounce play and I'll set an order in to get a bounce play. Sometimes it just won't come down. It just keeps going. I don't go chase the momentum. I let it go and say, well, I didn't get filled. It keeps going. I get that so often. Like, well, what if you don't get filled? What do? Just move on. I'll still try to fill out to understand if I can get a bounce play, or is it too overextended and now too high up in my opinion to get the bounce play. Of course, is when I first started and wasn't looking for the short like me and Kevin do now. Now we can be looking for that short and that backside move on down. Again, just for instance, if a play is going up 100, 200, 300, 400%, and I'm looking for a bounce play because I don't like trading breakouts and my bounce plays never got filled, I would just, that built so much discipline and patience from me early on, just watching a play go 200, 300, 400, 500%, and I never entered because my bounce orders never got filled. And that to me has made me to where I am now, and such a disciplined and patient trader, just waiting for trades to come to me.
Yeah, that is excellent. I mean, we're touching on a lot of good points here. Know your fear, because maybe some out there struggle with the fear of missing out, and the fear of missing out is going to cause you to chase unless you really discipline with that. So a ticker doesn't hit your entry and it keeps on, let's say you wanted a dip, it didn't quite hit it, and then it just shoots up and then you just jump in up there at the top, and that fear of missing out, it causes us really to capitulate the account, because now we're going off of our trading plan, the original trading plan, and now we're going against that. Now we're going to go against other things and adjust risk parameters mid-trade, which is going to cause the accounts to bleed. So know your fear. Know your fear. And mine is being a fear of losing money. So when I'm in a trade, fairly green on it, I want to take it off. And so how I can mitigate that is take a partial position off, leave leftovers to work, and try to ignore it. How often, guys? I'll say this because this is very important. I've heard this over the last 10 years, nearly every single day, Josh. Every single day. Haven't you heard traders say, if I only would have, if I just would have left a piece on, if I just would have gone and taken a nap, if I just would have. So rather than me say that anymore, I try to do it, right? I leave a piece on and let it work. If you're taking 200 share position, maybe take 50 off, and then leave 50 or 100 or so just to work, and you can adjust your stop to break even. And so you're green on the trade, because my fear of being wrong, fear of losing money causes me to make mistakes in that instance, but I know I'm green now. I know I'm green, Josh. So I can adjust the stop break even. And really it's like, I know I locked in $100 on this trade, and I'm either going to make another 100, another 200. I mean, who knows how long they're going to bleed some of these shorts. Sometimes I've had these things fade all day, and you can pad the wallet very well with leftovers.
Yep. And then below the FOMO, that's another thing too, just going back to that, kind of the last slide too that we had up, but just the big thing is the P&L. A lot of traders want to trade that or see that. Got to get rid of that too. That's another bad thing that traders have as well and face early on, or a bad habit traders build up, is staring at that P&L or having a look at it. And that then goes back to the sizing we talked about. But yeah, the FOMO, the fear of missing out, you've got to let trades go. You've got to understand, again, like I've talked about, I know in one of these one-on-ones, I kind of jokingly make fun of people, not make fun of, let's not say that, but give them a hard time when they rush to get married, right? They've been together for 2 months, 3 months, whatever it is. You're like, you're already getting married? I always always say, you say to them, the other person, they always say to what? They want to be together forever. I love you. Can't wait to spend the rest of our lives together. Well, if you have that want to trade stocks forever, what's the rush? Everyone's always in a rush. I understand that's the world we live in now, but I just always go back to that traders are humans that, we're getting married. I'm like, you just got together 2 months ago. Now you're getting married this fast? Go live together for a few months, a few years. Make sure that's someone you really want to be with before you rush into it. You want to do this forever, same thing. You want to, be married to someone forever. You want to do stock trading forever. Take your time, have patience, know that there's going to be many trades next week, next month, next year. How many trades do you think we're going to see? And so you have to get past Kevin said so much, this is the one, this has to be the one, this is the one. No. Never, there's never the one for me. Now, maybe goofingly, jokingly, and in a way for those competitions that we just had, because you're looking for those supernova, big, crazy 400, 500, 700% movers. Because yes, with those, you can bank in a hurry and really ratchet up the going bigger share size. But is that something I normally trade? No. My normal hits are what? Just base hits, just looking to get on base. And that's all I care for. I'm not looking for home runs.
Yeah, traders want the drive-through of trading, right? Just pull up, say, hey, I want a home run today. and then
I'll take 2 slices of cheese with that pepper jack and Swiss, please.
You're getting nothing. In fact, we're taking your money and not giving you anything. That's how the market can be.
You get a bag of rocks, not even coal. Coal you could actually maybe use for no, you get rocks,
right.
Just dirt and rocks.
Yeah, it's so important, guys. Your edge is going to play itself out over time. You're going to develop it, and it'll play out over time. You got to focus on the series. This is the main thing. I mean, I just had a trader blow up over this. I literally told him, I think your biggest struggle is focusing on singular trades, and then he focused on a singular trade the next day and blew up. You're going to have to experience it if you don't believe it. You have to be the house. This is going to play itself over time. One trade should not impact your equity curve much. It really shouldn't, unless you're in the green from the get-go. You should not be applying so much risk on one trade. It's essentially what I'm saying. One trade shouldn't have that impact on your performance at all. You should absolutely eliminate one trade from doing that and focus on being the house, letting the series of trades work over time. So trade the pool is good for that. They force you into discipline. Really, you have a max drawdown on the day. So unless you buy out of that, I'd advise not. If it's not your day, it's not your day. It's one of the things I struggle with too, where I'm red and I don't want to be red on the day. So we have to work against our emotions, traders. If you want to be amongst the 10%, what do you have to do? You have to do what the 90% are not doing. And that oftentimes means not buying high, selling high, buying low, like your AQMS trade today, Josh. Sell up high, buy low. It doesn't feel right and it doesn't feel comfortable in the moment, because you see, oh, everyone's buying this ticker up and now I'm taking the opposite end of that. It's not comfortable, but it's profitable. We have to not do what's comfortable in trading. So what's comfortable is, too, when we're red on the day, oh, I want to try to dig my way out of this hole, and you just got to know the edge isn't there. Step away. You can have a red day, and you're going to have red days, and it's fine. But what's not fine is going deeper and deeper into the hole, playing hands that are not your edge. And in fact, not only doing that, but then oversizing, which I know Josh spoke on that a lot of traders do. They're going to oversize on hands that aren't even their edge, because they're not trading the plan anymore. They're trading their P&L. And that's why he suggests hiding that, because we trade well, traders. Money's a byproduct of trading well. If we trade the P&L,
big time,
it's gonna be trouble.
Yep. And that's one thing about trade the pool. Of course, how often we've talked about managing your risk. Well, that's something you can do with trade the pool. It's something I did to myself early on. Kind of didn't even think about doing it, but I ended up doing it to myself, which was put myself under the PDT rule and having a margin account versus. And that's when I wasn't even looking to short. And that was really just I'll go a margin account, because why? Like he talked about, I wanted every trade to be the home run trader. I want to go max size, and I thought that was going to be the way for me to make money and win, versus the opposite. Me just taking base hits, not worried about going big, and having a cash account. So I'm glad I did that. I'm glad I did a margin account, because I was the one that at first every trade had to be the trade, and we've talked about it. Chased a third halt up, chasing a play, didn't wait for a play to come to me, went against all the rules, just looking for a small little baby position and get a little, or I say small baby position when it's my max size, but tried to get a small little scalpy play. Let me just get 5-10 cents on as many shares as I can get, when all in fact I didn't know what I was doing. I was chasing, of course, like I said, watched a play complete go go. Then you finally get in where at the top, it actually halts down on you as it did me. And now here I am down almost a little, about a third of my account size. Luckily, I cut it right away, didn't blow my full entire account. So, but still a third of it gone just like that in one trade. And I realized I needed something different. I needed not to go big. I was managing my risk right and kept myself under the PDT in a margin account, but I realized who cares? Let's just keep it small. And I didn't do a cash account back then. I just worried about trying to get 3 trades a week that were the right trades, weren't the trade, but were the right trades. Being a stock sniper, waiting for trades to come to me. And that's what I love now. The fact with Trade the Pool, you can do that all day, every day. You don't have to worry about a cash account. You don't have to worry about the PDT rule at all. You can go around and avoid all of that by getting one of these evals or even using the demo accounts that we have out there available for 14 days. Essentially 2 weeks you get to trade for free and test your skills. And then of course then the eval, so you get to do it for as long as you want, really, day in, day out. And like Kevin said, they have a max drawdown. So even just for whatever reason early on, even though we're telling you have a stop loss, we're telling you about worrying about, essentially your discipline and your patience and your confidence, we can challenge all that over there. So if you have a bad day where your discipline is off, your confidence is off, or you just don't stick to a stop loss because you didn't form a plan, right? Well, so what? Your max loss gets hit, you can call it a day. And it's not one of those things where then you keep over trading. So what, say your max loss is 250 on that account. Well, some people, next thing you know, they overtrade and they're down 2,500 and their whole account's gone.
Yeah. I mean, the reason we are stressing all of this, guys, is because we've lived it. You were swinging and I was swinging. And I say don't marry tickers because I was marrying tickers. These things we just don't want you guys to do because we've lived through it. We've lived through it. And a lot of my traders, guys, they'll have a bad day and they'll be gutted about it. But then the next day, they're all euphoric because everything's working for them. So we cannot think, even on individual trades, we can't think on individual days either. It's because if you look at the big picture and you have an edge, it's going to play itself out, guys. There's going to be trades, red days. It's going to happen, but it will all work itself out. So don't allow yourself to go into tilt mode, on the red days or red trades, because it's just not worth it. But additionally, on top of that, for Trade the Pool, I love them specifically because I don't have to locate shares to short, Josh. Yeah. I love that. When I'm at other brokers, I mean, it's time consuming. I oftentimes will miss the trade because I'm like sitting there, okay, locate this many shares with this ticker, and then you're paying for that. And then also, like, when you're doing that, you're paying to locate. So that adds like a layer, like a little psychological, emotional thing up there, knowing, okay, I'm already red on this trade. Right. I need X amount to even just make up the locate. So yeah, Trade the Pool is absolutely great for that. Love it. And the risk management, I mean, it's as far as you just minimizes the risk. You don't have to put your own capital at stake other than buying the eval, proving yourself, and then just making money along the way. So protect your capital at all costs, guys. It's the oxygen to your trading. Mr. Josh, what are your final thoughts? This was a fun series.
Yeah. And then again, just go watch these 1 through 8 over and over and over again until a lot of this starts getting ingrained in your brain and you start doing it on a daily repetition without any thought process, or like, you don't have to, I need to do this today. You're just doing it. You just know exactly what to do, and you do it Monday through Friday when you wake up until you're done for the day. When it comes to stock trading, you need to have, again, when you went to school and you worked out and things were working out correctly. Again, anyone that's had any kind of regimen in life, there's a reason why you have that regimen day in, day out, because it actually provided really good results in the end. And so make sure you don't have, again, we talked about random trading, randomness essentially in what you're doing in your stock trading, because it will, like I saw it with my own eyes. I did it, and now I see it with other traders. It will equal the random result. So go back and watch this 1 through 8 over and over and over. Hit on those key points like we've talked about, from risk management to like looking at the P&L and how much that affects you, finding your setup, having patience, being a stock sniper, tracking and journaling, how important that is. I'm telling you, just hit those key points that you may have not heard of, and what we've talked about, and especially maybe overlap, that I've said, that he's said, that I've said, that he's said. Well, if that's the point and we both are saying it, there's a reason why. So you need to pay attention to that, focus in on that, and your stock trading journey will be a lot better and a lot smoother.
Agreed. It was a great time. Traders, if you want to, you can find me, the Green Team, Kevin Avery, on YouTube. I'm always happy to help traders. averydaytrading@gmail.com. You can find Josh and I on Trade the Pool's channel as well. You can grab the book Among the 10% off my channel as well. Josh, what you got for him? And you got a channel as well where traders can find you. Yes.
So look me up. PrimeTradingInvestments.com is my website where I do all the one-on-ones, morning alerts, live streams. So go to PrimeTradingInvestments.com. Here on YouTube, AK-47 AK-47, Josh Smith Trades, and on Instagram it is Josh Smith Trades. My name is Josh Smith. Go by AK-47. You look up Josh Smith Trades or AK-47, you're bound to find prime trading investments.
Yeah. Traders, the ones that are still here watching, you're the dedicated ones. We appreciate each and every one of you. This was a great time. Always, traders, embrace the risk, accept the results, trade the probabilities. They will align in your favor over time as you develop your edge. Until then, guys, we will see you.